Kyle Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello, everyone, and welcome back to this week's episode of the Security Token Show. I'm your host, Kyle Sonlin, joined with my co-host, Herwig Konings, here in sunny Miami, Florida. And we have an amazing episode for you today. But before we dive into it, I would like to thank our sponsor, which this week is Vertalo. Vertalo threw an amazing conference just a few weeks ago, the Digital Assets and Securities Conference in Austin, Texas. And we were there with the whole film crew and did a ton of interviews, both on the floor with Eve as well as me and Jonah, doing some awesome interviews with some industry leaders from around the country and the world. So check out on our YouTube channel some of those great interviews that are going to be coming out, as well as more information for the next one, which is actually going to be sooner than you maybe think.
Tons of great content your team put together. Bunch of industry leaders. You can learn a whole lot from those interviews and from this show. We've got a ton lined up for you today, including industry news, new STOs you can learn about, as well as a trading activity update, followed by our main topic, which this week is all about the ETF mania. Ooh. But before we do, we got to get into our top 5 things that you need to know in the industry.
Kick us off. What's number one?
Well, number one is actually Republic, a well-known crowdfunding portal in the space, and they have made some big waves by announcing that they've got 150 million smackaroos as an investment into the company. So that's a whole lot of money. That's a war chest that they're going to put to work to grow their huge crowdfunding empire. Spans across real estate, gaming, as well as startups and more. And now they're even thinking about launching a digital securities exchange.
That's fantastic. We talk about the crowdfunding efforts and how the primary offerings they seem to have solved. Now they're looking to get into the secondary side. Tokenization plays a clear benefit there.
More players, the merrier. Number 2, Kyle, what do you got?
Polymath. Polymath has their official CEO. They had their interim CEO who's running the show now for about 6 months after former CEO and founder Trevor Kverko is no longer with the company after some misconduct allegations. We covered that a couple months ago. But now their new CEO is Vincent Kadar. He's a 30-year expert in the securities and finance field. He ran a company called Telepin Software, was the CEO there and ran that business. And now he joins Polymath to build on their operations. They just launched their Polymesh blockchain, so they're really looking to make some
Polymesh is not quite live, but they announced that it's coming soon, which is exciting. And Vincent is going to be launching their for-profit arm, so they're going to be helping to build onto this actual blockchain, which is part of their actual nonprofit foundation.
Congrats to Polymesh.
Anyway, it definitely sounds like a fantastic hire. Looking forward to meeting him one day. Moving on to number 3, if you thought 150 million was a lot of money, try the size on for 420 million and 69. That is the final amount that FTX, the cryptocurrency exchange, has raised in funding in its Series B-1, which tells me that there's probably a 2, maybe even a 3 probably in the works. But that's exciting because FTX has a huge burn rate as we see them join on many major projects, sponsorships, and naming rights for arenas and leagues and all kinds of other things. You need a lot of capital to make waves, but they certainly are making them.
This comes on the heels of over $1 billion that they raised earlier this year. This company is well capitalized and certainly making a splash. Finally, episode number 4, before we talk about the rest of the news, number 4 is about Coinbase and NBA. So you may have heard about the NBA sponsoring and working with NBA Top Shot and Dapper Labs to launch NFTs. They now have another sponsorship in the crypto space, this time again with Coinbase, who's going to be a sponsor for the NBA, the WNBA, as well as something I found interesting, Herwig. The gaming side of it, NBA 2K, will also have sponsorships with Coinbase. Maybe there's also some NFT stuff going in there.
Probably a good overlap there, but what I'm most curious about is, as I just mentioned, FTX actually has the FTX Arena here. That's the Miami Heat Stadium in Miami. And I'm now wondering, is there going to be Coinbase ads in the FTX Arena? That's an interesting overlap.
Some competitors in the same industry.
We'll see how that goes, but love it, love it, love it. That's more crypto adoption. And last but not least, number 5 here, we've got Archax, which announced an official completion for their Monex digital raise, which actually raised $1.5 million. That's
Euros.
no small chunk, or euros, even better. That's probably closer to 1.7 or more ish in dollars. That's not a small chunk of change, but more importantly, it was a great proof of concept. This was their first raise through the Archax portal, and it used the DLA Piper regulatory framework to make it all possible. So that's a successful offering there through the Archax portal. It's great news. I'm sure there are many more in the pipeline.
Archax has been in the space for quite a while now. Exciting to see them launching their first client on the primary side, reaching the full fundraise amount and secondary market sometime soon.
Love it. And now let's head to Jessica to get the rest of the industry news.
Hi, I'm Jessica Burns, and I'm back with this week's industry updates. This week, the Euroclear Consortium announced the results of its wholesale central bank digital currency trials with the Banque de France. The group used the CBDC to settle French Treasury bond OAT transactions. Euroclear concluded that the blockchain technology could effectively manage post-trade security transactions using a central bank digital currency. However, in order to draw definitive conclusions, it believes that there needs to be trials with real-world volumes, and the potential cost savings should be quantified. However, Euroclear identified challenges such as immature technology, the management of the DLT platform, and the interoperability with other platforms. The Central Bank of France continues actively exploring a central bank digital currency, or a CBDC, completing a significant trial of a blockchain CBDC in the country's debt market. Over 500 institutions in France have participated in a 10-month experiment testing a CBDC issued by the Banque de France for government bond deals. The CBDC trial was led by Belgium-based financial services firm Euroclear and used a system developed by American technology giant IBM. The CBDC test also involved the French Public Debt Office, along with the central bank and consortium of major financial companies operating in France. As part of the trial, the participants traded government bonds and security tokens, settling them using a CBDC supplied by the central bank. The project tested use cases of a CBDC in a range of everyday activities, such as issuing new bonds, using them in repurchase agreements, as well as paying coupons and redeeming deals. It's been reported that the project was successful and went well beyond previous blockchain initiatives. BAKKT Holding Inc., a trusted digital asset platform that enables consumers, businesses, and institutions to buy, sell, spend, send, and redeem digital assets, will be trading today on the New York Stock Exchange under the ticker symbol BKKT. The BAKKT platform has seen strong growth since its founding in 2018. Last month, the company announced that 1 billion points and miles have been linked to the BAKKT app only 6 months after their public launch. As the company grows its partner set, it has announced multiple partnerships with plans to expand access to cryptocurrency to banks and credit unions across the United States. BAKKT also recently announced a partnership with Choice Hotels, enabling members to convert their reward points to cash and use that cash to buy Bitcoin. Meanwhile, back in the US, the New York office of the Attorney General announced cease and desist letters of 2 cryptocurrency lending firms. Another 3 firms have received requests for information, corporate ownership, and handling user deposits. The names of the 2 largest lending platforms that were retained in the cease and desist letters were Nexio Letter and Celsius Letter. The cease and desist letter gave the 2 firms 10 days to cease any and all activity and confirm to the OAG that the activity has ceased, or explain why the OAG should not take further action, including seeking all relief permitted by law. Nationally, the SEC has not overly stepped in on existing platforms, but Chairman Gary Gensler has indicated that they are definitely on the SEC's radar. In other news, FTX US announced an NFT marketplace this week, but said it would not list NFTs that pay secondary market royalties to their holders. Solana's NFT ecosystem has grown tremendously over the last few months, generating hundreds of millions of dollars worth of trading volumes as dozens of projects popped up. Earlier this week, crypto exchange FTX US announced the launch of FTX and NFTs marketplace and said that they would differ from other Solana FTX platforms. Like the U.S. exchange itself, FTX NFTs are a centralized platform under the jurisdiction of U.S. regulators that require know your customer identification checks, as well as compliance with security laws in the event that NFTs are deemed securities. This is possible when royalties are paid out, which is why they were banned. And that's all I have for you guys for this week. Let's head over to John and get the latest in STO and market updates.
Yo, what's up? I'm John Pittman, the Token Board, here with your weekly STO update. Now, it'd be rude if I didn't start with an update on security token market's very own STO right here. So far, the crowdfund has been an amazing success. Community support, you guys, have driven us to $2 million pledged from over 300 investors worldwide. Now, if you're interested in pledging, then click the link in our bio, and that's on every platform you may be viewing this on. We also have this available on every team member's personal page. You don't know the team members? Well, you need to go do yourself a service and visit our brand new and sexy About page. From there, you can see each team member and also the big picture of what all security token market brings to this industry. Moving on, we have a company who becomes the first Romanian startup to do an STO, and their name is Apotheca. They describe themselves as an ecosystem that bridges the gap between health and sports performance data. Apotheca is planning to use the funds raised from the launching of the STO to develop a sports NFT that combines both those health data points and performance metrics from athletes all across all sports categories. They're of the hope that this data-driven ecosystem will enhance fan engagements and experiences during live games while additional streams of revenue. Added bonuses include incorporating sports betting, fantasy sports leagues, licensing, and even marketing opportunities. Apotheca is already in contract talks with a few professional sports teams to partner and deploy the NFTs. Investors right now can invest globally and online through a tokenization platform called Utavi. To finish up, we have another update on Blockstream, and it's about them closing out yet another successful tranche. They're sixth and the largest yet. This raise came in at over $16 million, and that brings the overall total fundraise of the STO to $36 million. For the uninitiated, Blockstream is a Canadian-based blockchain tech company that provides investors exposure to Bitcoin mining through a security token issued on the Liquid network. This method basically provides an alternative way to bet on the price of Bitcoin. Blockstream intends to list its BMN token on the STO exchange Bitfinex in an effort to make the STO more accessible to investors all around the world. Well, that wraps up my piece. Here's Keith with your market updates. I'll catch you guys on the other side of the blockchain.
Welcome back to yet another weekly secondary market trading segment. As always, all news and pricing data is sourced from stomarket.com. Today, the total security token market cap is at $1.11 billion. We've been hanging out right around in this $1 billion range for about a couple of months now. Mount Pelerin is up big this week. Earlier today, actually, the MPS token jumped up to $6.77, a spike of over 28% from a low of $4.55 for the week. Volume is continuing to rise for the token. This week, its trading volume reached over 100,000, which is a 15.7% increase. Realio Network is up again this week. The RST token hit as high as $3.06 from $2.90 last week. Volume pulling back a bit, though. It's at 260,000 from 294,000 at the time of recording last time. That's a decrease of about 11.5%. The Exodus security token is playing in quite the range. Over the week, the token reached as high as $25.75 and fell back down to $14.01 at the time of recording today. Volume is crashing. This week, it recorded about 236,000 in trading volume, whereas it had 401,000 last week, nearly cutting it in half. T0's token is coming down as well this week. It's sitting at $4.35 from $4.90 last time. A 30% spike in trading volume. We're up at $1.3 million from $1 million the week prior. INX is hanging out at $266 from $269, remaining relatively stable. Volume is also unchanged, remaining at 2.9 million for the week. Moving into tokenized stocks, we have Greysdale Shares up high this week, right? All new time highs for Bitcoin, so it's following that trend. This time around, the weekly volume for the tokenized Greyscale Shares is actually 27 million from 12 million last week. It's an increase of 125% on FTX. The Tesla tokenized stock shares on FTX also spiked in volume for the week. Trading volume hit 9 million this week compared to 1.3 million last week. Various FTX tokenized stocks are sitting at nearly double the typical volume for the week, showing a massive demand for the exchange's offerings. It's been yet another fun week in the markets. As always, do your own research and hit me up on Twitter at KeithDLT to send me all your hot takes. See you next week.
Wakey, wakey. Welcome to Inside the Metaverse with your host, Eve Van Call. We go over the top breaking news relating to the Metaverse weekly. I'd like to start off with Shopify's new way to mint and sell NFTs using Venly. Venly is a blockchain and wallet as service provider. who is now able to provide NFT integration for Shopify stores with the click of a few buttons. The new NFT application will allow merchants to mint and sell non-fungible tokens by using the Polygon POS technology with extremely low transaction fees, quickly and easily. Everyone is doing the NFT taekwondo. So you gotta be quick in the race to the metaverse. That's why up next, we have Facebook planning to change its name and hire 10,000 jobs in the race to lead the metaverse. Using technologies such as virtual augmented reality, Facebook plans to create a greater sense of virtual presence. I did not know just how serious Facebook was taking the metaverse until now, leading by example with leaving all the old behind and embracing the new. They might even announce the name as early as next week. This is crazy in a good way, and it just gets me pumped. The money is flowing more and more, and that's why next we have blockchain gaming company Animoca raising $65 million investment from video game company Ubisoft and various investors, including Tron founder Justin Sun. With this investment, Animoca brands would be valued at $2.2 billion, making it one of the most valuable companies in this blockchain gaming space. To the moon they go, and speaking of moon and space, next we have Galaxy Interactive raising another $325 million fund aimed at the metaverse and next-gen games. The venture capital firm will fund companies in the interactive sector that combine content, finance, and tech. That was Inside the Metaverse with your host, Eve Van Cole.
And now it's time for the main topic of the Security Token Show, episode 114. We're talking about Bitcoin ETFs, what all the mania is about over the last week or so. And we're going to explain what ETFs are, what this means for the Bitcoin market, and what it might mean for security tokens. But before we do that, we of course need to go over our Companies of the Week segment, where Kyle and I, we each pick a company that we thought made the biggest moves in the space last week. Kyle, I'm curious, who's your pick this week?
So my pick this week is a repeat winner, one of the biggest players in the industry, and that is T0, because they came out with a huge infrastructure announcement that I think that I wanted to cover, really highlight, dive into why it's very exciting. And so T0 came out and said they are officially approved to do self-clearing and settlement for security tokens traded on their platform. And so essentially what that means is before this announcement, they had to work with a middleman who essentially was the one that finalized and stamped the approval of any trade that happened through the T0 platform. This is pretty standard in the traditional industry, but allowing for self-clearing and settlement offers a wide range of benefits in the security token space that we preach here all the time. And so let's just dig into three of them that get me excited. The first one is that this paves the way for 24/7 trading. Nobody wants to do 9 to 4, and especially if you're international and that your time zones are different, right? So with 24/7 trading, we see how beneficial it is for crypto and how inclusive it is for world involvement. And this is the opportunity here, because essentially the reason why these clamps are put on a lot of these ATSs, exchanges and things around the world is because of these outside parties that have to do this in the traditional space, and so they just hold everyone to the same standard. Now, T0 can do it themselves. On top of that, they're cutting out middlemen, so transactions are going to be much smoother. They don't need approval to settle a specific security if they want to bring on a new listing, as well as finally, it's going to be cheaper and much faster to actually settle these securities by doing it in-house. So this is exciting stuff from T0, and I'm happy to see them continue to make developments.
A win-win-win. That should not be undermined, how important and disruptive that could be for those benefits. I think that's a great choice, Kyle.
Absolutely right. How about you?
Well, I am choosing First Carbon because they just launched an NFT platform for, you may have guessed, carbon credits. Now, if you don't know what carbon credits are, they're actually an instrument, in some cases mandatory, in some cases voluntary. Mandatory for the companies that are required to offset their emissions because they are polluting the planet, and these carbon credits are essentially proof that in some way emissions were taken out another way, perhaps from trees on land somewhere, taking out that carbon in. And then those carbon credits being assigned or purchased by a company who then retires them, so that they can go ahead and claim the credit and prove that they went and offset. And of course, individuals can do this too. And carbon credits are becoming a big market. It's kind of a way to invest in the green planet, as well as the idea that probably the quotas are going to rise more and more. But it's a very archaic market, and First Carbon plans to change all of that with their NFT platform very simply. If you want to register your carbon credits and be able to mint them, you can do so through their platform. And now you have tokens representing carbon credits. You can buy them, trade them, and someone wants to redeem them and retire them, you can go through their platform and simply burn the tokens and claim the credit. So I think that's an awesome use of the blockchain and a great way to make a better planet as well as to bring in the crypto community.
That's a great choice. Carbon credits are awesome, great for the environment. Awesome to see this is a new market that's springing up that may have not been available without tokenization.
Yeah. Now, to the main topic, folks. We got some big news that came out. Both ProShares and Valkyrie are two ETFs, exchange-traded funds, that were approved by the SEC to go ahead and go live. Big news, billions of dollars in trading volume. But what does it all mean? Honestly, I don't perfectly get it. Kyle, I know you're a markets pro. Please explain to our audience, what is an exchange-traded fund? What are the different types? And then let's get into what these actual Bitcoin ETFs mean.
Yeah, so this is a pretty exciting news because before these announcements came out, there was no way to have a stock market accessible investment into the Bitcoin space. We saw stocks like, MicroStrategy or now Coinbase and others that potentially give some exposure because they're in the same industry. But if you wanted to actually own Bitcoin and buy it through a stock market, through your broker, or more specifically, if you're a fund or a large institution or an endowment or a retirement fund, and you needed to stick to some of the constraints that are required of you, you need to only buy stock market available things, right? They have a certain level of standard compliance, those kinds of things. So the exciting thing about an ETF, exchange-traded fund, is that you're essentially creating a basket and a product that fits that security standard. So with an ETF, we have a couple different types of ETFs, especially for Bitcoin. And so you've got, right now, these two that were approved. You've got ProShares and Valkyrie, as you mentioned. What they're doing is, already we saw futures contracts exist. And futures contracts are where you take a commodity, you take an asset, and you agree on a purchase or sale of that asset at a future price. So you set 3-6 months in the future, I will buy a Bitcoin at 66,000 or 70,000 or 30,000, whatever it is. And depending on how likely it is that that's going to be valuable, those things trade in what is kind of similar to what that asset should trade at if you actually own
like a derivative product.
Exactly. It's a derivative product. You're totally right. So these already exist for Bitcoin. It was definitely the first institutional step towards getting some of this access. And so what these ETFs that were approved essentially did is they collect a basket of these futures contracts and then sell that in a fund product. So you're essentially getting exposure into the Bitcoin's futures market, which then gives you some exposure to the price of Bitcoin. So this would be called a futures contract or a futures ETF, and that's what we've seen from both of these so far.
Interesting.
I think the other side of it would be a spot ETF. That's where I think people are hopefully heading towards, which is maybe the more intuitive one to think about. If you wanted to own a fund product that owns Bitcoin, you may as well just own the Bitcoin instead of owning futures contracts. And so that would be called a spot ETF, and yet we haven't quite seen one of those approved, despite the fact that there's many applications, and we'll probably see it sometime in the future.
Including, we saw the largest private asset manager, Greyscale, apply now for their own license to become a spot ETF with their Bitcoin trust, as they call it. But back to the hand at these ETFs. So we have futures ETFs on the market. We don't quite have spot. I guess for the SEC, there are definitely some obvious differences. That one of them, the spot trading specifically, being of more concern for managers, perhaps, who knows what the SEC is thinking. But going back to futures markets, certainly we saw the same week these get released, an all-time high get hit by Bitcoin and other coins soaring along with it. So why did these coins, or Bitcoin specifically, go ahead, rise up in value? Is it because these funds are now bringing in more institutional demand and therefore more Bitcoin?
I think that's definitely the expectation, is that with additional avenues for some of the largest capital pools in the entire world, which are these institutional funds, these are pension funds, all types of endowments around the world. Now they have their beginning opportunities to begin to invest directly into Bitcoin through a public market product. This definitely creates more stability, or hopefully creates more stability in Bitcoin's price as more people are able to be exposed to it. Again, a spot ETF would be a more direct comparison here. futures versus spots ETFs can sometimes trade differently. While usually over time they should follow a very similar price trend, there are examples of spot versus futures ETFs that do trade differently. So that is something important to consider. I think with the SEC, there's also some concerns around actually owning the BTC and who's going to do that, how that's going to happen, how to protect investors. So there's some things there that are still being ironed out, but this is definitely a way for new institutions to get exposure to Bitcoin and just creates more maturity in the market. You now no longer have to go through a bunch of steps outside of the traditional markets to get exposure. You can just do it through a TD Ameritrade or a Charles Schwab account.
That makes a lot of sense to me. It brings a lot of validation to the crypto product because now many asset managers and fund managers you mentioned, they now are able to, for the first time ever, not because they couldn't, but because they weren't allowed, and now they can purchase essentially Bitcoin through these ETFs. The more demand that pours in, that makes sense to me. More Bitcoin that needs to get hoarded by these ETFs, more demand for the overall asset in general, and of course, that would probably mean a spike in increase in Bitcoin.
Yeah,
What do you think?
It's really exciting. I think it's great news for the industry, but I think the fun part where we can pivot this conversation now is to the fact that an exchange-traded fund is neat, but it's not tokenized, and there's a lot of benefits that are being left off of the table because of the fact that we're just talking about some of these traditional market infrastructures. So maybe if you wanted to take it from here and kind of start digging into some of the benefits that a tokenized product could provide for the market.
Absolutely, for sure. In fact, as we like to say at Security Token Market, this is Wall Street, but Wall Street without walls. So in this case, the ETFs, they're built on the traditional system of Wall Street. They're not leveraging blockchain, DLT. They're not leveraging all the systems that we believe security tokens can bring to the table. If, for example, Wall Street were to adopt blockchain technology and able to essentially launch these same ETFs that we're talking about, but via a tokenization, you now have all of the benefits that we've talked about and preached on the show. The ability to manage your cap table instantly and update it automatically with smart contracts, which also means instant clearing and settlement for the underlying securities. Just as you mentioned earlier with T0, who's working towards this step, 24/7 trading. Easier global access because the entire registrar is digital and the ecosystem and participants are all digitally managed. The list really goes on, but I think what's even cooler is, of course, with traditional securities, you have to go through to traditional brokers and traditional big banks like Morgan Stanley and Goldman Sachs in order to leverage things like lending or collateralization, right, or borrowing and all of that good stuff.
Great point.
You can do this much, much easier with a token, of course. And so with these public stocks, as we may have seen with some of the tokenized stocks already happening out there, you can actually see this become a much easier process to go ahead and buy digitally your tokens that represent this Bitcoin ETF that you can go ahead and collateralize. And if there's a giant DeFi ecosystem out there, well, this just might be the rails to bring in the traditional Wall Street ecosystem into that same world. So I'm excited for, of course, the inevitable intersection of security tokens in Wall Street. But in the meantime, we believe and might even be working on something to go ahead and compete with Wall Street and leverage security tokens against these ETFs.
So yeah, I mean, especially as there's no spot ETF, right? You have to get all this approval from the SEC instead of just being able to bring something amazing to market. And I'm sure there's going to be a lot of great news coming in the tokenization space as these industries continue to bridge together.
Absolutely. And with that, I think we can conclude our show. Hopefully you learned something. If you have feedback or suggestions or even thoughts and questions, please reach out to us. Kyle and I were available on LinkedIn, on Twitter. We're everywhere. And of course, so is our community. So please follow us, subscribe to our newsletter, What's Drippin'. You can just do that via any of our links. And of course, Kyle, what are we doing right now?
We are doing a Testing the Waters campaign for a crowd
Yes,
fund
we are.
for security token market. You got to check that out. You can go to link in bio anywhere on any of our socials and find out more information around that. You got to check it out because we're pioneering alongside some great partners.
And with that, I hope we catch you next week, and happy tokenizing.